Yeah, not too bad. Now, to continue on, we're doing a series where we're creating basically fake human beings that we're getting loans for, to hopefully give someone out there an idea of what they need to be at and where they need to be. And they might go, "Hey, I'm in this situation. I've always wanted to know where I need to be." And so hopefully this is like just giving people rough ideas. The amount of conversations I have with people going, "I just want to know what I can borrow. I just want to know what the interest rate would be for me." And so, yeah, Corey, what is the real first thing that someone wanting to go for a first home needs to be thinking?
First thing they need to be thinking are, one, do I have enough cash? I think that's usually people's first hurdle. And a
Mhm.
very close second is, well, I've got the cash now, but can I actually borrow?
Yeah,
So those are always the questions we have: is how much can I buy? What price range can I go for? Those
yeah,
are always the concerns.
yeah.
So
And really, how much can I borrow comes down to what?
comes down to your current debts. So considering it's a first home purchase, how many car loans, credit cards, those type of things. And income is a big one because of how they assess income or how they assess the loan. For example, the interest rate's 5%. The banks are putting a buffer of 3% on, or
Yeah,
sometimes 2.5%, but each, as long as a minimum 2.5% buffer on, which is essentially they're assessing your interest rate at 7.5 or 8% or higher if the rate's higher. Um, so income is a big tool here to buy a first property.
right. Now, okay, so today we're going to get a guy named James into his first home. We're going to get him a loan. Now, a couple of factors of this. Firstly, there is assistance out there for first home buyers, but we're not
Yes,
going to cover that today.
correct.
We are going to look at just simply James trying to get into his first home. The
Correct.
second is we're looking at a house price of 500K. Why would we pick 500?
Look, 500K, the median house price across Australia seems to be around 500K. James is a single, just out of uni for 2 years. He's not buying for a family, so it's an achievable first purchase potentially for someone
Yep.
like James out there.
Yep. Now, I'm going to share my screen, and just prove that this is an option for people. The 500K. So you'll see here, this is in Balcombe Hills, 499 to 519. It's not a main road, but it's got a pool. So we're not making this up when we say these are options for people. This is out in Newcastle. This is a little townhouse here, 500, 550. My screen is not actually letting me. Um, Here we go, Taree. So heading into regional Australia up our way in the mid-north coast, something like that is available at your 485 to 510 range. And then we have here Tamworth, regional Australia again, 460 for renovated, nicely renovated,
Yeah.
3 2 baths. So we're not making this up when we say that this is out there, it exists, and it's a way to go. So let's have a look at the figures. Now we've got James here, a single man. Now he's living at home, but that really doesn't matter because the bank will take into consideration a rental expense anyway, won't it? Not
Well,
just
well, yes, that's true. However, Benny, doesn't matter. They're going to consider that he's going to be living in his house
there
going
you
forward. So they're going to
go.
assume expenses have increased, right? So there's some challenges there.
Yeah. Now we advertised yesterday in our short, or earlier this week actually, that he was earning 70K with 10K casual, but it really was struggling to service. So we've gone and given him an $85,000 pay-as-you-go salary. And what does this mean over here, the orange and the red, Corey?
Yeah, the orange. Look, the orange and the red means that based on the loan amounts that we're going for that we've requested. So if you scroll down, Benny, our loan amount we request is 400. So if it's sitting at yellow, we're borderline in the position of where we can take on the deal. If Benny brought that down to 380, there'll be some green starting to come in because it's a little bit more of a comfortable servicing position, right? It's a more likely servicing position.
Yeah.
Um, So that's what it's saying here. So some of the banks that are on yellow, like, oh yeah, we're comfortable, but perhaps the debt to income ratio is a little bit too close for comfort, or it's a little bit borderline. But I also want to point out, Benny, is um, you know, on that video it services and now it doesn't. Things change very quickly.
Yeah.
Current
And
and
we did James initially when we were tossing around these characters two
yeah,
months, no more than 2 months ago, and he serviced nicely at
yep.
that mark. So with the interest rate rises, it is affecting people's serviceability. Now, one thing that we need to also look at here is LVR is 80 now. We've said that he has got 20% saved, which on a $500,000 home, what are we looking at there?
So we're looking for a deposit without stamp duty. We're looking at about $100,000 flat. Adding in stamp duty, depending on the state you're buying, you're adding in another 20 to 30,000 on top. So comfortable with legals, about 130, I'd say you'd
Yeah.
be.
Yeah. Now, later this month, we're talking how to save a deposit. We're talking about the
Yes.
realities. We're kind of breezing over it like it's not an issue, but it is.
It's a big one, yeah, but we'll get there, guys.
So here's the thing: James at 85K is just servicing. Now he doesn't have any personal loans, but say he had a 5K credit card, it knocks him right out of the park.
Yep.
It just kills him. Pepper might look at him there. But essentially, this is why reducing debts is so vital, because you take the 5K credit card and suddenly, a couple of other banks come
More
up.
options.
Now, reality is for James to get comfortably in, we looked at this earlier, 95K, look at the difference it makes.
Huge.
So if you earn it out there earning 85K and you want to buy a home loan, what do you suggest?
Look, the suggestions I have are there are two ways you can go. Everyone's looking for that. I'll buy the dream home one day later. But in James's scenario, we want to advertise that a young person getting in, working hard and doing as much as they can, when they're younger, they benefit more later. They get the dream house, they get the dream car. So I have a lot of clients that have their base wage, but also are very keen on property. So they're also working casual jobs on like a weekday, evening, and weekends, taking on extra work. So to earn another $10,000, you're probably looking at another, 8 hours in your week to, 15 hours in your week to borrow, right?
That makes a huge difference, just giving an extra $200 a week just on a weekend, working some weekend rates just for a couple of years, just to get it.
It's really short. It's really short term, and it feels long at the time. But guys, if you don't get into a property, it's going to continue to go up in value. The market's shown that over the last 20 years. You're going to be one of these people that have property and have it nearly paid off by doing this, or you're going to be one of these people close to retiring and going to have to figure out how you're going to keep paying rent or move into some community housing, because we don't know what the future holds for us, right? In terms of what government guarantees we get. So it's important to work hard now and take the opportunity. No one says that you have to keep working this job forever, right? How the bank assess your income versus what your income actually is vastly different. So the reality is someone like James can actually afford the loan in terms of real time very effectively on 85,000.
Yeah. Now, I have run into a few people recently who are earning that, 120K loan size, don't have any debts. They're out there wondering, could I get a loan? Yeah, you really could. And you could get a decent loan at this point of those interest rates. And so really, if you're above 85K, put into the 95K and you're looking for first home loan, you've got your deposit there, give us a call. We'd love to talk with you. If you're below that, here's the thing. A lot of people talk to us and start talking about guarantor. I've got someone who's going to go guarantor. Do you want to just really quickly cover that?
Yeah, look, there's two type of guarantors. There's a servicing guarantor, and there's a security guarantor. A servicing guarantor is when you're bringing in mum and dad, and the bank is using them partially for servicing, right? You've got the deposit. However, a lot of banks don't love doing that because you're kind of wrapping up their position and combining the position. It's not great. A security guarantor is mum and dad that have property. They've got a lot of equity that can be utilised, and the lender is okay with taking a second security or going to the same bank where your parents are and using your parents' equity to leverage a purchase for your own. The pros for that, you get into a property quicker. The cons for that is if you're wanting to go do other things, you're wrapping up your parents' security into it. Or if your parents want to buy investment properties, they're going to have to consider your property that's been wrapped up in equity. So it can get a little messy if it's a long-term plan. And lenders will take on your parents' owner occupier property, but they would much prefer to take on an investment property because they're not the banks, even though they make billions and millions of dollars a year, they definitely don't want to be on a current affair today tonight, kicking your mum and dad out of their house, right? They'd much prefer to kick your parents out of an investment property. So that's their preference, but it is an option.
Now, the only other option there is to find someone who you get into this with, maybe a partner or someone that you're getting, a mate of yours. Now, in the next situation, in the next situation, we're going to talk through James getting married and what dual income will do to this deal. But just, do you want to give us 20-second wrap up of what it would mean to get in with a mate?
What it would mean to get in with a mate or even a sibling, right? Or another family member. What it means is that you're combining both of your positions. So that's income, liabilities, not in the sense of same bank accounts, but in the sense of an assessment of a loan. So if you're earning 80,000 and your friend's also earning 80,000 and you have $10,000 credit card and they have a $10,000 credit card, all of a sudden the position becomes a lot stronger. You share.
So you'll see here I've added someone and they've got 95K. Let's take that down to, you're back on your 85K thing. Even just give them 85 and we're just suddenly servicing a much bigger loan.
Correct. There's a lot of variances this can go. Are you providing all the cash? Are you both splitting the cash and providing it? So there has to be probably some type of legal agreement in the background on if you're providing all the cash, what's the actual ownership of the property? So you can actually split up the ownership on the titles. It can be 40% Jeff and 40% James, whatever it is. There's ways that can be done.
Let's call them friends.
It's a way to continue to build wealth. So if you want an investment property after that, it's an option to sell the property and reutilize the equity, or it's an option to still be able to service potentially something else.
Yeah, perfect. Well, mate, thanks so much for that. Now, if you want to know more, make sure that you give us a call at Source Financial. If you're in this situation, you want to talk, because here's the thing, we're doing this for James. We've talked you through his situation, but your situation might be different. Say you're a sole trader, different situation all over again. So there's so many different options here. Yours will be unique. We'd love to help you and even just have a chat with you and go, hey, look, this is where you're at. This is where you would need to be in your situation, in your state, at your pay range, with your trajectory. Maybe you're looking at a pay rise in the next 6 months and you want to get ready now. Give us a call. We'd love to be able to help. Like we said, we're going to continue to talk about James. Next month, I think we talked through him getting married, and then talking through having children and all those kinds of things. So you get to follow along with James. We'll keep you updated with him, as well as Jess. If the interest rates go up, we'll tell you where he's at with his servicing again. And so we'll keep you going with that. Thanks so much, Corey, for your input. And hopefully this helps someone out there. Stay with us, and we look forward to doing the journey with James over the next little while.
See you, everybody.